Welcome back to Trading 360. Procter & Gamble in focus. It's higher, in fact, on pace for its biggest percentage increase since March of 2020. It came out with a quarterly report. Our panel is ready. Erin Lash, Director Consumer Equity Research at Morningstar, and Mel Casey, Senior Portfolio Manager, FBB Capital Partners. Thank you both for being with us. So, Erin, I'll start with you. What stood out to you? How did you find this report?
Yeah, I thought it was a very solid quarter. Obviously, the continuation of top line growth at a mid-single digit cadence, combined with gains at both the gross and operating margin line, with continued investments behind their brands, in particular, the acceleration of volume growth in the U.S. as well as Europe, speaks to the prudence of the investments that they're making behind their brands, both as it pertains to product innovation as well as the marketing support.
Mel, your thoughts. I'd love to hear. Your sales were a little bit short. Profit beat. Erin, noting the strong quarter. How about the price increases? That's something that we look at in these types of companies. Your thoughts, Mel?
Sure. Thank you for having me on today. I think one of the big reasons we see the reaction in the stock today is the pricing power. That's the thing people have been very cautious about as inflation has come down in 2023 and into 2024. Are we going to see that pricing power, particularly for household products where we assume consumers might be a little more price sensitive? So the pricing power held up nicely. That was a good observation in these earnings. And so much of the earnings power has come from that in the last couple of years. So that story remains intact for now. Also a good read through to a couple of their competitors. So in the next couple of weeks, we see Kenvue and Church & Dwight report earnings, which are names that our clients own. And so it's a good read through for household product pricing.
Do you think that Kenvue and Church & Dwight will do well based on what you're seeing here today?
I think so. I think we can expect, no major surprises in the negative, and so we feel pretty good about that. But I will say that, all of these names that we're talking about so far, there's no real screaming buys here at the moment. The market, obviously, we've all-time highs that we've reached the last couple of days, and all these valuations are kind of in line with the market. So we're more interested in, for additional capital. Putting to work, identifying opportunities outside of that.
Erin, what kind of rating do you have here on Procter & Gamble, and do you expect to see it change in the next year or so?
Yeah, we think that the firm is incredibly competitively advantaged, so we rate it with a wide economic moat rating. But in terms of where shares trade from a valuation perspective, we do think the stock looks a bit rich at current levels, trading at about a 10 to 15% premium to our fair value estimate. We would look to be buyers of shares if the stock traded down on concerns over competitive intensity or economic concerns. But at this level, we don't think the stock looks overly attractive.
Right, understood. And what's the feeling and theme for 2024 there over at Morningstar? Are they looking at a market that they think could move higher overall? Or are there some broad brush ideas?
I would say, in terms of consumer products and thinking about the market for consumer products, there's been a lot of concern in the market as it relates to what's going to happen to volumes and what's going to happen to promotional intensity. To what extent, if consumers trade down, will branded manufacturers look to counter those efforts by funneling additional resources toward promotional spending to try to chase short-term sales and market share gains? In the case of Procter and several other competitively advantaged operators, we don't think that that's a concern. And so we would look for them to continue to have an eye towards the long term, and think that could be, another positive as it pertains to the overall performance of the sector, which has come under pressure over the last several quarters.
So concerns about volumes and whether or not they're going to be ready to spend for the brands that they love. And we saw people trading down. I mean, when they were worried, people in a higher bracket were then shopping at Walmart, and they had never really been to Walmart. So sometimes you do see some changes. This is the final point, Mel. I mean, your thoughts, because they did have and invested in their brands. But, you know, just this weekend I had a conversation. People have been shopping at this supermarket, Lidl. It's a Germany based supermarket. A lot of the brands are not names we necessarily recognize. So are people shifting how they're spending? Mel, final thoughts here.
Sure. That's interesting that with the German supermarkets, they've been very active in growing share in Europe for many, many years. They're more recent entrants to the US. There's a lot of runway for them here. For sure, inflation is slowing, but it's not like prices are necessarily going down. So you're going to definitely see people being more open-minded to new brands and exploring things, and that's definitely a headwind for these companies to be aware of going forward.
Yeah. It's interesting because I have friends going there now because there's not a lot of brands that you know. It's different brands. And so the behavior seems to be a variety. In some areas, no one's going, and in other areas, they're running there. So thank you both so much. Good to see you. Erin Lash of Morningstar, Mel Casey, FBB Capital Partners. Good to see you both. Really appreciate it.